BNY Mellon just became the first large US bank to gain SEC approval to custody Bitcoin. Meanwhile, BlackRock just amended their custody agreement with Coinbase to require on-chain Bitcoin deposits within 12 hours after concerns were raised that the giant crypto casino was selling paper Bitcoin to ETF issuers. So what does all this mean? Could it mark the beginning of the end of the massive honeypot that is Coinbase custody? Plus, China begins injecting massive liquidity into markets. Will this throw fuel on the Bitcoin bull run fire? What's up, YouTube? Welcome to Pure Bitcoin Signal. I'm Hurley, Director of Content at Swan. Now let's talk Bitcoin. So just a few days after BNY Mellon, the largest custodian bank in the US, became the first bank to receive an exemption from the SEC's stringent SAB 121 rules, BlackRock yesterday amended their custody agreement with Coinbase to now require direct on-chain Bitcoin deposits within 12 hours. Now, these are huge developments in the world of institutional Bitcoin adoption and custody, and they're a potential catalyst for other banks and firms looking to enter the Bitcoin custody game. Take a look at what Swan CEO Corey Clipson had to say about the news yesterday.
Big news in the Bitcoin custody world. Last week, SAB 121 was applied to Bank of New York Mellon. This is a large bank that now is allowed to custody Bitcoin. So what does this mean? What I think it means is that we're headed down a path where something that I forecast 5 years ago in setting up Swan, I think will be coming down the pipe pretty soon, which is the separation of brokerage and custody, which is the way the traditional financial markets have always worked for a long, long time. This is basically saying like, hey, you can't be like FTX and both custody the crypto and also be doing the trades, or like BitMEX. So you always hear about manipulation inside of these exchanges where they kind of wreck their customers or trade against them. And what you have in securities land and traditional finance land is you separate the brokerage so that entity can't also be the custodian. And basically there's settlement on the back end with the custodian, and that's a separate company. So I think this probably paves the way for a lot more institutional custodians to enter the space. And I think that's what you'll actually see mandated over the coming years, is that you'll have to have that separation of brokerage and custody, which will mean that things like Celsius and FTX just won't be possible in the future. So, whether you like having big institutional custody of Bitcoin, I wouldn't do it. But from a settlement perspective and from a sort of investor and trader protection perspective, I think it's a positive development.
So this further legitimizes the inevitable integration of Bitcoin into the global financial system. But it also could be signaling the beginning of the end of the massive honeypot that is Coinbase custody. Take a look at this chart from timechainindex.com, highlighting the extent of the honeypot that is Coinbase custody of Bitcoin. Coinbase currently holds over 2.2 million Bitcoin on behalf of exchanges, the ETF issuers, custodians, funds, companies like MicroStrategy, and even miners. And this news comes a few weeks after the FBI issued a warning that North Korean hackers are targeting US Bitcoin ETFs in a bid to steal digital assets. The hackers are using advanced social engineering techniques to breach the security of companies associated with these financial products, the FBI stated. So you can just imagine the absolute pandemonium that would follow the kind of rug pull, hack, or even potential 6102 style seizure by the US government of this massive honeypot that is Coinbase. BitPain absolutely ravages Coinbase in these tweets. First, he says, BNY Mellon was approved for Bitcoin custody because BlackRock wanted a custodian they could trust, and Larry made a call. Coinbase's days are numbered. They have been undone by their long-term bet on Ethereum. He then followed it up with this, saying, it's going to be really satisfying when Baldylocks, referring to Coinbase CEO Brian Armstrong, realizes that we were right, and he should have split off his blue chip Bitcoin sales and custody platform from his crap coin gambling operation, because serious investors don't want their Bitcoin custodied by a clown show organization that sends out alerts baiting retail into gambling their life savings on effing GRT coin, and they all switched to BNY Mellon the literal instant they could. He followed that up with a response to someone that said Coinbase was Lindy, meaning they have staying power, saying BNY Mellon was founded in 1784. It was the first company listed on the New York Stock Exchange. Coinbase is not Lindy, LMAO. They are an unserious pink sheet penny stock clearinghouse who have been worth less in Bitcoin terms every year since their Series A. Serious people want their Bitcoin custodied by serious people. The type of investor coming this cycle is fundamentally different than who has been here before. They're not going to rotate their Bitcoin profits into effing bonk because Baldylocks sent them a text alert. Harsh language, but I agree with his overall sentiment that Coinbase likely shot themselves in the foot a long time ago by not splitting off their institutional Bitcoin custody operation from the crap casino trading operation. Bitcoin is undergoing a transformation from speculative trading asset to legitimate global financial asset. And like what happened with FTX, it will separate the legitimate players from the grifters and conmen. So if this spells the beginning of the end for Coinbase as sole custodian of the hardest asset in the world, remains to be seen. But as Corey mentioned, even though large-scale institutions custodying Bitcoin was always inevitable, that doesn't mean it's a good idea. That's why at Swan we always advocate for and educate about the importance of self-custody. The whole point of Bitcoin is to remove the need for an intermediary or a custodian like the big banks. Just like the iPod made it possible to store 1,000 songs in your pocket, Bitcoin makes it possible to store $1 million or even $1 billion worth of value in your head. Shout out to Anil for the brilliant marketing poster. But we know self-custody can be intimidating. So if you have a large portion of your net worth in Bitcoin and you want to upgrade your Bitcoin self-custody security, then Swan Vault is for you. Swan Vault is an assisted multi-sig solution that optimizes security, ease of use, and keeps you in full control of your coins. Visit swan.com/vault to learn more. So regardless if you think large institutions custodying Bitcoin is a good idea or not, it's happening. And like most things, it's bullish for Bitcoin in the long run. And speaking of bullish, let's end on a bullish note. China just released a massive stimulus package that will allow banks to borrow money directly from the People's Bank of China to invest directly into the stock market. This is obviously huge for the continued uptrend of global liquidity, which we've been tracking. And as we've talked about, the Bitcoin price is highly correlated with global liquidity, meaning when global liquidity goes up, the Bitcoin price goes up. So we'll have to wait and see if this has any meaningful impact on the short-term price of Bitcoin. But the overall trend of increasing global liquidity is again super bullish for Bitcoin. But of course, we don't need any news like this to be super bullish, because as Bitcoiners, we can feel it in our bones. But I thought this video chart was pretty cool, showing the weekly relative strength index of Bitcoin historically and where we are today. Do you feel the vibes? Because I sure do. And all signs are pointing to Bitcoin being ready to ride. That's it for today. Thanks for watching. Let me know what you think of all this in the comments. Like this video if you made it this far, and maybe share it with your friends and family. And of course, subscribe to the channel for more pure Bitcoin signal. Until next time, TikTok, next block.